You are listening to Mining Stock Education.
If you have the US trying to pull the copper to the west and get it over here into Europe, you have China building a rail line to pull it east to China, and the two of them are having a geopolitical tug-of-war over 4 copper projects, one of which is us. That's incredible, and that has been the thesis, is that this was the key ground, the key place to be, and it is truly turned into the top spot in the world for copper exploration right now.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers, on the floor of the Investors Exchange at PDAC in Toronto, and where you're going to be introduced to a company that has a copper discovery right in the middle of a tug-of-war between the United States and Western nations and China. And this occurs in the Zambia, Congo, traditional copper belt. And this company is Midnight Sun Mining, a new show sponsor. They believe they have a tiger by the tail with this copper discovery that they're advancing. Here to talk about it is Adrian O'Brien. You're the VP of Corporate Development, Business Development.
Yep.
And you do an effective job telling the story. We met actually 18 months ago. And at that time, there were some things I didn't like about it. Then we met again in Beaver Creek last September, and I was like, wow, you went from a 20 million market cap to, I think it was like 250, 275 market cap at that time. So you did a lot of things right. Could you start there? You know, take us back 18 months to when we first talked, and I wasn't as interested to when we met in September of last year.
For sure. So a lot's changed, right? We walked through this process 18 months ago, and I showed you our project. I showed you Dumbwa, which is our flagship target, and I walked you through what our plan was. At that point, we had just started the process. Really, 18 to 24 months ago, this was a completely different story. We were a company that had been roughly $20 million for almost 10 years. We had one of the largest and highest grade targets ever recorded in Zambia. So we had an amazing target. We had multiple targets, but we needed funding and we needed to move this project forward. So we came up with a strategy. The first part of that strategy, and when we met the first time, was an arrangement where somebody was earning in, and that somebody was Cobalt Metals. We managed to exit that earn-in. So we took back 100% of Dumbwa, which is the way it should have been from day one. We ended up with 100% of this thing. We've got 100% of our assets, and we funded this. The first step was a $10 million financing. It was 22 cents, $2.5 million institutional, and the rest retail. That gave us the money to get the ball rolling. Kevin Bonel joined our team, and for anybody that doesn't know, Kevin Bonel was the guy that Barrick hired to unravel Lumwana. So Lumwana, 900 million tons at 0.5. If you go back 18 months, 24 months ago when I was first telling the story, Kevin was hired 2 years earlier to unravel Lumwana, to figure it out, to unlock it. And he gave Barrick 1.62 billion tons, 62 years of mine life, and 9 million tons of contained copper. So he gave Barrick a tier 1. He gave Barrick the asset they had been looking for to become Barrick Mining, no longer Barrick Gold. And then Kevin left his job at Barrick and joined us because he saw the same potential at Dumbwa and he wanted to lead the charge. So in the last 18 months since we met up the first time, funded, we have almost 40 million in the bank. We've got Kevin Bonel, it's our secret weapon, and we are on our way. We've got 4 kilometers of strike, we've got a massive discovery, and we think we're on our way to delivering Zambia's next major copper deposit.
So I talked to Rick Rule recently, and he said with the Aurelian discovery at 75 cents, it was riskier than when the stock immediately popped to $3 after the discovery hole.
Yeah.
Would you argue that that's the same situation with?
For sure. And you look at the institutional investors. So we've built a really solid institutional following over the last, call it 24 months. And that was one of my things that I came in and said, look, we're going to turn this into an institutional story. It's been a retail story for a long time. Retail is a super important component of these companies and the markets that we're trying to create. But at a certain point, you need the backing of those large institutional investors, both for credibility and also for stability in your market, right? You want those people there. If you need to get another check, if you need to have more capital, you need the right people involved. So, we set that up. But if you look at the story now, every kilometer we deliver, we've de-risked. So we keep de-risking and de-risking and de-risking. And yeah, you might be paying more for the project, but at 25 cents, 30 cents, 40 cents, before we had done all of that work, before we delivered a discovery, it's a risky scenario. Is it real? Is it just a soil anomaly that doesn't hang together? So I always argue that sometimes it's best to pay more. Sometimes you're better to pay a higher dollar amount for your shares, but you know what you're getting and you know what we're on the path for. So now it's about us executing, delivering, and continuing with this methodical, systematic drill off. which is, I know we're going to dig into it. It's a pretty unique situation. We're not attacking this like a typical junior. So we're getting a lot of credit for that from some of those institutional investors. Which is
You're
cool.
in the land of the majors.
We are.
And as I referenced at the outset, you're right in the middle of that geopolitical tug of war between China and the United States.
Yeah.
Could you explain to listeners what that is?
For sure. So this is an interesting scenario, obviously a key part of the story. And what it really does is it backs up the thesis that I've been running around delivering for the last 3 years. If you look at where we're sitting, okay, you have the traditional Zambia-Congo copper belt, which runs northwest-southeast. You know, that's what you hear a lot about. When you hear people talk about like the traditional Zambia copper belt, that's what they're referring to. When you look to the west, you'll see an area that contains the 5 biggest copper mines in Africa. You have Kamoa-Kakula, Ivanhoe's flagship, Kansanshi, First Quantum's flagship, and you have Lumwana, Barrick's flagship, as well as First Quantum's Sentinel mine, and just above us, Tenke Fungurume, which of course is amazing, now owned by CMOC. If you look at those assets, every one of them is over 1 billion tons. So in what part of the world do you have a concentration of billion-ton deposits of that magnitude? Nowhere. It doesn't exist. This is the only place in the world that is an average of around 1 billion tons. But not only that, these assets are right at surface. So you're not talking about a porphyry deposit that's 2 kilometers deep and at the top of the Andes. We're talking about deposits. Take that same amount of contained copper, pull it to the surface, flatten it out, and develop your tonnage on strike. So from an economic standpoint, these are incredible deposits, incredible mines, high margin, really incredible. So around that area, you have a concentration of majors, but it's not just the ones that have operating mines. It's the ones that are there looking for operating mines, ones that are looking for the new billion-ton tier 1 discoveries, the ones that are looking for, you know, that next major billion-ton deposit. So if you look at all of that, you have this perfect setting for access to copper that can actually fill that deficit that's, you know, hanging on the horizon, and that's very real. All the major banks have now come back and said, look, we forecasted it 10 years out. It's not 10 years out, it's 12 months. Where is all that copper going to come from? I just recently watched Robert Friedland present at BMO, and the man is a master. But there was one point that he made during his presentation, and if I'm not mistaken, he said we need a new 10 million ton contained copper discovery every year for the next 25 years to fill the copper deficit. Sit on that for a second and just marinate on that thought. It's absolutely staggering. You know, when you consider Lumwana is 8 million tons, 8.5 million tons. So they need one of those every single year for the next 25 years. Where's it going to come from, right? So you have this perfect storm brewing. And it's been that way now the entire time I've been working on this. The stage has been set. And then what happens is we have Trafigura starting this rail line called the Libido Corridor. Now, lots of talk about that in the news. The US State Department just put up $350 million in order to build it. So it's happening. It's built, or it's being built. You have a rail line that connects a western port in Angola, comes all the way across Angola, and cuts through 4 major assets. Those major assets are Sentinel, Lumwana, Kansanshi, Midnight Sun's property. Both of our properties, actually, if you include Luswishi. So we have that major rail line running through our properties and connecting to a spot just north of Ndola on the north-south rail line that goes into the DRC. Now, what that's about is access to these copper supplies. The world recognizes that this is the area that can supply that deficit, that can actually make a difference. Quick to put into production, cheap to put into production, high yield, high margin, and can be delivered quickly. So that's the magic recipe, right? We're right in the middle of that with one of the new assets, the only new discovery that has the kind of size and scale that it can be one of these new billion-ton deposits. If we're lucky enough that it hangs together the whole way, could be very, very large. Now, that's all going on. China makes an announcement that they've cut a deal to build a $1.4 billion rail line from that exact same point north of Ndola, going east through Tanzania to an eastern port to get that copper to China. So now, what do you have? You have the US trying to pull the copper to the west and get it over here into Europe. You have China building a rail line to pull it east to China, and the two of them are having a geopolitical tug-of-war over 4 copper projects, one of which is us. That's incredible. And that has been the thesis, is that this was the key ground, the key place to be. And it is truly turned into the top spot in the world for copper exploration right now.
So you are advancing a discovery on a project, Dumbwa, that was previously owned by First Quantum.
Yeah.
So that begs the question, how did they miss it, or why did they miss it?
Everybody missed it. There's been multiple groups that have been on this ground that have done work. Now, when you go back to the beginning, the work that First Quantum did was the most important, okay? First Quantum owned this property. Now, if you picture First Quantum's land package 20 years ago, when they were working on Kansanshi, getting Kansanshi into production, you look at that land package, they had about 20 licenses. Now, 20 licenses encompassed a lot of ground outside of Kansanshi, and Kansanshi is a huge project. I always say our property alone is about 384 square kilometers. It's hard to understand how big that is until you get there and you actually drive across the property and you see how long it takes to get from one side to the other. This is massive. Now, they had an even bigger land package, 20 licenses, and in Zambia they have something called the use it or lose it rule. We call it the use it or lose it rule. And the idea is that if you have licenses you're not actively working on, you're not moving forward, maybe they're exploration ground, maybe they're just cushioning your land package, the Zambian government says, look, if you're not working on it, if this is a real estate situation, those need to be shed, and other companies get the chance to drive them forward. And it's actually incredibly fair. It prevents majors from controlling everything, keeps projects moving forward, keeps the tax dollars rolling in. So at that time, they had done all the soil sampling that created the Dumbwa target. It's a 20-kilometer anomaly that tops out at 0.73% copper in soil. That's extraordinary. It's really extraordinary. And you have this copper clearing, and we'll get into that in a moment. But you have this massive target. They delineate the target, they drill 21 holes, they hit on every single one of those 21 holes, north to south, across that target, proving originally that there's a sulfide system there. There's a system at depth that needs to be defined. They never systematically drilled it. They drilled wildcat holes into the geochem. But at the time, they were looking for a different model. Basement dome geology has really only been around for about 15 years, starting with Kamoa-Kakula and Lumwana. So this is a very specific type of geology. It's different. It doesn't match the standard sediment-hosted model that is in the belt. Typically, about 80% of the deposits are in the sediments. So you have different, unique geology. You have, a time when copper prices were $1.50 a pound. You have them putting one of the biggest copper deposits into production. So obviously, that's their focus. And as a result of all of that, perfect storm. They had to choose 15 licenses to shed. This is what they shed, and we happened to pick it up. So good timing.
It's not porphyry type drill results that you're reporting.
No.
Yeah, maybe explain that a little, further dig into the type of deposit
Yeah, for sure. I think it's one of the biggest challenges. I know you and I talked about this a little bit when we met up last. And when you're looking at these systems, there's a couple things to understand. So if you look at the belt, you have these giant basement domes. The area is called the Domes region. And the Domes region is named after these basement dome features that exist across the belt. And the basement domes are the oldest rocks in the belt. They're about 1.4 billion years old. So you have these giant basement domes, and those basement domes dictate where the copper deposits typically form. Fluids come up over the top, they settle out into voids in the sediments, and over time there's a chemical trap there and these copper deposits are formed. So that's the bulk of what's in the belt. In the basement domes, Lumwana and Kamoa are the perfect example. There are a few deposits that have formed in the basement itself, but the geology is different. It confuses people. You might have big geochem anomalies, you might have a couple of different reasons why these things show up, but completely unique unto themselves. And so when you're looking at the area and you're looking at what we're doing, what we find all the time is that people come in and they look at our drill results and they think, oh, it's not, I looked at this porphyry and it was 200 meters of 0.5 or 1% or whatever. And you guys only got 30 meters. And I say, well, yeah, but where was their deposit? I say, well, it's, in Chile or Argentina or wherever, Panama or wherever it might be, at the top of a mountain. So 2 kilometers underground at the top of a mountain versus the same amount of contained copper at surface, not near surface, at surface, running on strike for a perfect open pit, no underground drilling, $160 a meter. Which one are you going to choose? That's why every major on the planet is there. So this basement dome geology is completely unique, even the sediment geology in the area, but it's why it's a top spot to be. And so when people look at those drill results, they look at what we're doing, it's understanding what they're seeing. If you see 10 or 20 or 30 or 40 meters of 0.3, 0.4, 0.5, 0.6, those are the kind of intercepts that are going to give you big tonnage over time and allow you to build one of these major deposits. So what you have to think about is how that strings together, and you see multiple layers that are stacked. That's where you get the mineralization density. That's how you build a Lumwana or a Kamoa-Kakula. So really unique and exciting, but it's an educational thing because people aren't familiar with them. They're new. There's only 3 examples that are out there right now.
And what's your market cap right now?
Sitting at about 300 million.
Canadian.
So, yeah, Canadian. So it bounces around a little bit. We've been a high of 376 million and a low of maybe 250, 260 this year. So it's been incredible. I mean, we started this process at 25 million market cap, and the first year we had a big move. It kept going to a high of $2. We've settled at kind of $1.30 right now, and now it's about showing the world that we're doing this methodically and delivering the next big deposit.
So if there's any meat on the bone for investors that aren't investors yet but are listening to us, what was Lumwana bought out for as a comparison?
Yeah, it's an excellent question. So if you look at the history of Lumwana was owned by Equinox. So Barrick purchased it from Equinox almost 20 years ago now. And there was two bids. The first was MMG, and that was $5.5 billion. Barrick ended up winning, and they bid $7.3 billion. So imagine a 900 million ton deposit with mine infrastructure being purchased for $7.3 billion when copper was $1.50 a pound. Today, $6 copper. What is a deposit in the same belt at the same kind of size worth? It's astronomical, right? You start to run the numbers and it gets silly really fast. But the point that you want to make really is just the comparison to something there's no M&A in this camp, right? You have that example, and then you have Tenke. Tenke, I think 50% of it was purchased for nearly $4 billion. So you think about the value of these things, it's absolutely astronomical. But there hasn't been a new one in a very, very long time. So that's what we're on the path to doing.
And your chief operating officer, if we could talk about him again,
Yeah.
Kevin Bonel, he actually saw this target, the Dumbwa target, when he was working for Barrick.
That's
Can you
right.
talk about that and a little bit of that transition?
Yeah, absolutely. So Kevin, Kevin is amazing. When you think about this camp and you think about this belt and you think about the deposits that are there, there's kind of 3 or 4 individuals that are extremely well known for their work. It's a very special kind of geology. It's very unique. There's not a lot of places in the world where you see this type of SED-hosted copper, and the basement dome stuff is even different again, right? So David Broughton, who discovered Kamoa-Kakula, fantastic geologist, very well known. Murray Hitzman is kind of the godfather of this type of geology, was a professor at the Colorado School of Mines, I mean, incredible. And Kevin Bonel. So Kevin was the Freeport-McMoRan exploration manager for Sub-Saharan Africa for over 20 years. I mean, he was very, very, very involved in this belt. He has a number of deposits to his credit. He's extremely well known, and he knows every deposit, how it was drilled, when it was drilled, what drill hole hit what, because he's been there for everything. He's been a part of this camp for 25 years. He lives in Lusaka. So Kevin was working for Barrick, and how that all came about is that, they had purchased Lumwana 20 years earlier, as we said, $7.3 billion. They spent 18 years trying to make it work. Couldn't do it. Didn't have continuity, had uranium contamination, they had some issues. So Kevin comes in, Barrick seeks him out, brings him in 4 years ago. What they couldn't do in 15 years, in 24 months, Kevin gave them 1.6 billion tons, 9 million tons of contained copper, or nearly 9 million tons, and a 62-year mine life in 24 months. And then says, hey, there's this other target that looks exactly the same, has the same geology setting and timing. It's in the basement dome. I think we should go over there. We did not manage to put a deal together with Barrick, thankfully. Kept it with 100% of it, and we got Kevin. Kevin left his job and joined us, and Kevin's our chief operating officer. So he's taking exactly the same approach that he took at Barrick for Lumwana. He's applying the exact same methodology, and now we followed that methodology through to the point of our drill program, which was 10 years long awaited, and our third hole hit. And now we're 140 holes into the program, actually more than that, I think 145 or so. We've got 4 kilometers of drilled strike, and we are well on our way to defining this giant target. So.
And you're drilling fences, essentially, right? You're not just stabbing holes, doing wildcats like First Quantum.
No, and actually it's a really good point. So not only are we not doing this the same way First Quantum did, we're not drilling this project like a junior. So what I mean by that is when you look at the junior space and you look at the way that people generally attack projects, they often go out and let's say you have a target that in our case, is 20 kilometers long, we split it in 2. So we decided to do it in 2 bite-sized chunks. We do the southern half first, we do the northern half second. So we've taken the first 11.8 kilometers, we ran IP, we've already got thousands upon thousands of geochem samples outlining this giant anomaly. We built a geological model and we're attacking it. But if I was a typical junior, Okay, and I say that a little bit tongue-in-cheek, and I'm not trying to throw anything at anybody, but this is just often the way people do things because you're trying to drive capital raise, you're trying to drive funding, and you're trying to move these things forward. So they'll drill big space outs, kilometer, 2 kilometer spacing, big step outs, and they try to get as much excitement around that as they can. But at the end of the day, often those don't hang together. Just because you hit copper over here and you hit copper 2 kilometers down the road does not mean there's copper between the two. So we didn't want to do it that way. We wanted to go in knowing that this is going to be the kind of target that would be a fit for any of the majors in the camp. We took a completely different approach. We laid out a plan to drill this methodically and on a grid the same way that anybody would if they were trying to build an inferred resource. So we set out 50-meter hole spacing. So that means that from east to west across the system, we have a hole every 50 meters. Then north to south, we built a grid where we started with 100-meter line spacing, and then we pushed it to 200-meter line spacing so that we have 200-meter line spacing from top to bottom, all the way up the system and all the way across. So we're building a level of definition to build a model, to build a data set that is completely bulletproof. And when we deliver that to anybody we might discuss M&A with or anybody coming into the story, they can look at that data and there's no holes to be poked in it, no pun intended. This thing is bulletproof, it's a proper data set, and we've done it the right way. And we're winning huge kudos from institutions now. When I sit down to a meeting and I'm talking to a large fund and they say, okay, show me your drilling, and I lay out that plan, they go, are you kidding? You guys are drilling full, like a grid, all the way across this thing, and you're drilling it that systematically. And we are, because we want to be taken seriously, and we want to show the world that our level of work is the same as it would be if we were a major. We're not messing around. We're not trying to be splashy. We're not being promotional. We put a 1 billion ton target on this at 0.5, give or take, and we've said we're going to get there within 12 months, and that's exactly what we're doing. 10,000 meters a month, 5 drill rigs turning, on a grid, methodical, concise, and let's deliver a data set that blows people out of the water.
And with the data you're given to the market, you haven't released a resource. However, sophisticated funds and institutions can kind of infer their own conclusions of what you're doing here.
For sure. What we need to do is just keep showing the world what we have on those methodical step outs. So we've only released about 29 drill holes so far. Unfortunately, we're at the mercy of labs, and that's just the reality, particularly when working in this part of the world. There's only a handful of labs to work with. ALS has a massive backlog. SGS just reopened, and we were lucky enough to get into their lab at Kalalushi and have the opportunity to have our material processed close to our project. But look, these are small labs. They weren't prepared for 1,500 samples a week. They weren't prepared for thousands upon thousands of these things. This was an opportunity to go out and to make sure that we actually delivered, what we need to do. And so, we basically attacked this thing with such an aggressive approach. But what we need to show the public is that methodical sensibility, and just keep hitting it and hitting it and hitting it and showing it and building it and just keep dragging it out and showing the size and the scale and the growth in that systematic fashion. And I think that that'll give people a lot of faith in what we're doing. I think it gives us a tremendous amount of credibility, and it allows us to get to the finish line quickly. So, when was the last time you saw a 12-kilometer system drilled off in 10 months? It doesn't happen. So that's what we're doing.
And you're an explorer, so if all goes well, you might not be talking to me in a year, right?
Exactly.
Because this company might not exist. Exactly.
It's the plan. I mean, we never know how that's going to end. Obviously, we make it very clear. We're an explorer, we're not a miner. And it's a really critical point, because I think if you look at the junior universe historically, a lot of people arm wave that they're going to go into production. And I think that you have to be very realistic about what your skill set is, what your team's skill set is, what your role is. And we fill a specific role in this space as an explorer and as a developer. We make discoveries. We take projects to the point of sale. That's what we do. That's what our team has done historically. And it's really important to know that that's your goal, so that you build the project in a way that it puts itself in a position for M&A. And so that's exactly what we're planning to do. We do plan at some point to put this up for sale and let someone else that is a miner, that has the capability or the infrastructure to do it, put it into production. And hopefully this is a long life mine in the heart of the Zambian copper belt. And that's exactly what we want to deliver.
Are there corporates in your data room with confidentiality agreements?
Obviously, any kind of agreements we have are all confidential, so we can't really speak to it. But what I would say is that we're in a position where we have a lot of data that's not yet to show. We're waiting on a lot of assays. We have 110 holes that we're awaiting assays on, and that's going to come fast. And eventually we're going to break through that backlog at the lab, and we will have a better cadence of results. But look, we've got one lab to choose from. We're 95%, I think, of what they're putting through right now. They're running 24 hours a day. They have one prep room. They're moving to a new lab. That's going to get things moving. And that's going to create a data set that people are going to be able to look at and make good decisions very quickly. And that's the goal. So, at some point we'll fill that data room and we'll let everybody have access and give them an opportunity to see the real Dumbwa and what it's become and how quickly we've gotten there.
So would you call the story boring in the sense that you're just going straight along the anomaly that you've identified and you're just going to continue to do this with that war treasury you have?
I would say anything but, only because when you think about these new systems, right? Yes, resource delineation is not the most exciting thing, but if you're defining something that has the potential to be a brand new major deposit in the best copper belt in the world, literally the top spot in the world, surrounded by majors, building up to hopefully a transaction at some point, and you're delivering it, and every single set of drill results puts us one step closer to that transaction or that opportunity. I mean, to me, that's, as an investor, as somebody that's been doing this for 30 years, that is literally the most exciting thing you can be a part of, right? And if you're showing that scale, that growth in such an expedited fashion, that all of a sudden you're going, hey, I'll give you an example. 8 months ago, right? 18 months ago when you and I had spoken, we hadn't even drilled a drill hole, okay? 8 months ago, we had not put a drill on the ground. We're sitting here today and we have 4 kilometers of drilled strike. 4 kilometers out of 12, we're a third of the way there. And I think it takes a second for people to process that. Lumwana is roughly 4 kilometers long. We're at 4 kilometers today. So what we're showing the world and the speed at which we're delivering it is extraordinary. And I think that creates a lot of excitement. What I think is that sometimes it takes time for people to actually realize just what you're doing and understanding that methodical kind of thing, because we're not being splashy about it. And I think that's important. Maybe we don't get kudos for it now, but we will as this process goes on, because people will realize what we're doing is not being overly promotional. We're delivering something very real, very quickly. So, to me, it's exciting. The other side of that is when you look at a system that like Lumwana or like Dumbwa that's in the basement, Lumwana had a lot of twists and turns along the way. It's not like they made the discovery and then every single drill hole hits, boom, there it is. There was twists, there was turns, some things didn't work. They have a lot of overburden. They had uranium, they had contamination. So far, we have no arsenopyrite, no talc. We have none of the deleteriates you might expect in a system like this. No uranium, no issues. And, we're in the process of hammering that home. And I think, it's those twists and turns that really create the excitement. Maybe there's areas where there's new geology we hadn't discovered before. Maybe there's a new type. I mean, one thing that was a surprise early on is that the core of this system is Bornite. Bornite's the top copper mineral there is. Finding Bornite is amazing. This is largely a Bornite system. Understanding what it looks like, understanding the areas like the north of us where it blows out, where it gets wider, up to 2.6 kilometers wide. I mean, we're dealing with something right now that's between, let's call it 200 or 300 meters wide, up to 500 or 600 meters wide. If we get into an area that's 2 kilometers wide, 1 kilometer wide, what does that do to the tonnage? What does it do as we build it? Those things, as we go along, there might be higher grade areas, there might be lower grade areas. That's to be expected. Lumwana has the same thing. But every single one of those facets creates more and more excitement. So there's my answer to it being a boring story. There's a lot to look forward to.
What would be a barn burner hole? Would it be 50 meters at 0.7?
Yeah, that's a great question. So we've already put out a couple that were smoking. When you get 20 or 30 meters of 1% or 0.7% or 0.8%, those are barn burner holes here. So imagine this thing, and it's tough to kind of get a mental picture of what it is, but imagine a system that starts right under your feet, okay, right at surface, and goes down maybe maximum depth of about 200 meters. We've hit mineralization down to 266, but we typically say 190 to 200 meters is about what it looks like. But from surface to 200 meters in multiple layers. So one of the cool things is often we'll have more than one intercept in each hole, hitting all of those layers. So you hit a layer, then a break, then another layer, then a break, then another layer. So you might get a hole that has 20 meters of 1% with another, 10 meters of 0.8, and another 5 meters of 0.3. Combine that. Like, they're massive intercepts. So when you're looking at this, you kind of have to think about that context of the tonnage being not deep and in a big ball where you get these big, thick intercepts, being flat. And when you're hitting 10, 20, 30 meters, and you're getting up 0.5, 0.6, 0.7 or above, up to 1 or 1.2%, those are barn burner holes. So, putting that context around it, getting people to understand what a good hole in this area actually is. And then when you look back at our assays, the other thing that's really cool about that is when you think about these lenses, right? You have these 3 or 4 layers, they're pretty distinct, and they're sitting relatively horizontal. So we kind of get, if you can imagine the system north to south, it has this rolling feature, okay? So you kind of get these highs and lows, some areas where it comes right to surface and maybe some of those layers have eroded or been weathered away. And you have other areas where it dives deeper, and where it dives deeper, we get all 3 or 4 layers continuously in those holes. Now, when you think about that and you think about kind of how it's sitting, those lenses, okay, so let's imagine we're cutting the south end off and we're looking at it this way. They have kind of a flattened sort of cigar or sausage shape that tapers on the edges, right? And what you tend to get is a grade drop off that matches the corresponding east and west direction. So the center of it is the highest grade, and then just outside of the center, so it sort of goes from Bornite in the middle to more massive chalcopyrite to the outside east and west, then more disseminated chalcopyrite, then even more disseminated, and it keeps going like that with a gradual grade drop off till you get to the edges. Then there's a pyrite shell and it drops right off. So when you look at our assays and when you're seeing them and you're looking at them and going, okay, they hit a bunch of these 0.5s, 0.6s, 0.7s, or even 1%, those are amazing. But then they've got a bunch of 0.2s and 0.3s and 0.1s. Now picture what I just described and think about those lenses. And when you're looking at the drill results, think about where they're positioned when you look at our plan map. They correlate with that model, and that's part of finding the edges of the system. So, it's really that blended grade, that overall of what we end up with at the end of the day.
You have to understand the model to understand the value you're creating.
Exactly. Yeah, it's critical.
So your treasury, that'll take you to the 12 kilometers of drilling this anomaly, and how much will you have left in the treasury at that point?
We'll have about 15 million left. So we're sitting on about, call it 35 million. Could be 30, 34, 36 or whatever it is right now, but sitting on about $35 million. So we raised 30 million in October. We did 30.5 million at $1.35. Last financing before that was 10 million at 22 cents. So 7 times lift to this one. I said we weren't going to raise money till we were $1.50. It's exactly what we did. So we raised a bunch of money in October. We've got the money to get all the way to the finish line here. And this is, again, that first 12 kilometers. So you're looking at drilling for $160 a meter, all in, assays included.
Say that again. Say that again. Because
I love this point.
If you're drilling in the Andes, we know what that costs. I know what it costs in Nevada. I talked to a lot of guys, 500 US per meter in Nevada.
Yeah, I mean, my first drill programs that I was ever involved in early in my career in the late 90s and early 2000s, we were drilling in the Arctic, very northern tip of Quebec. We would spend 12 million in a season because that's your mob and demob costs. That's your drilling costs. There's only 2 drill contractors that are up there, right? We're drilling at $160 a meter all in. US, assays included, that's our cost. Absolutely mind-blowingly inexpensive. So what it means is that we can take that 30 million or 35 that we have, and we can get an enormous amount of work done. So to get to the end of that first 12 kilometers or 11.8 kilometers, it's going to be a total cost of about 20 million. So, we're into that now. We're well into that. So by the end of the year, we'll have 30 to 35 million spent, 20 million, and we'll be left with about 15. So we'll be in great shape with lots of cash in the bank. And in the process of selling Kaziba as well, our oxide deposit, putting that in the hands of a producer so that we can extract cash as quickly as we can. That's our self-funding model to take this forward with no dilution. So that's a 2-track plan.
Q4 last year, you raised 30 million Canadian.
Yeah.
But you could have raised over 60 at the time from institutions as well, right?
Yeah, the book was 65 million. So we clawed it back. Look, we don't believe in, you always want to capitalize enough that you have the money to do the job. You don't want to undercapitalize. I think it's the number one thing that kills juniors. And you want to make sure you have enough money. This whole model of raising $1 million and picking away at something, it doesn't work. It's not going to get you there. So we raised 10 million. That allowed us to get moving. When we launched the financing in October, we launched it at 10 million. I was on a flight to Munich. By the time I got to Munich, the book was at 25 million. By the time I got to dinner that night, it was $65 million. And I'm on the phone with the bankers saying, like, we should probably cut this. Like, we've got enough. And our banking team was incredible. They did such a good job. And that was syndicate of Haywood, SCP and Beacon, with Haywood taking the lead on a bought deal at 70%, and SCP and Beacon each doing 10, and all phenomenal groups. They all did a killer job. So, and we've just have coverage now from Haywood and SCP as well. So Pierre Viancourt and Justin Chan are both covering this, both put a $3 plus target on this. So, all really incredible. But again, getting enough money that we can do the job at hand, get to the finish line, and that raise was incredible. But also being mindful of dilution. Taking 65 million would have been over the top. Yeah, it would have been great to have that kind of capital, but at the end of the day, we didn't need it. This still gives us a surplus of capital, and we believe in our plan. We have conviction in the idea that we can sell our oxide resource that we just put together. We delivered an MRE this year. It's 2.33 million tons at 1.41% copper at surface. All 100% acid-soluble malachite sitting in the soil 6 kilometers away from Kansanshi's SXEW circuit, which is in need of feed. So that's the natural fit. But there's 2 or 3 other groups that have come to the table too. So now we're in a position to look for the best opportunity, find it, lock it in, and capitalize, monetize that asset. And that gives us funding going forward, whether that's 50 million or 100 million, whatever that turns into. It's more than enough capital to get Dumbwa to the point where we launch a process and the highest bidder takes it and turns it into a mine.
You own 100%?
Yeah.
And there's no royalties on it?
0.
So you're just going to execute methodically, not boring, but methodically, you're just going to continue to drill.
Exactly.
So for a speculator, you're cashed up, you're not going to the market, that's what you said.
Nope, not going to the market.
You're going to execute as long as they understand the model, they can interpret value as you're going to be reporting. More often too, the speed of the assays are going to be picking up here
right
too.
Now we're looking at about 6 to 8 week turnaround. And, we were promised a much quicker turnaround. It was more like a 2 to 3 week thing. But look, we're dealing with a small lab. They were doing a 12-hour shift when we first joined them. They had no idea what we were about to dump in their lab, and we gave them 1,500 samples a week. So we kind of created our own logjam. That lab is moving through. They're actually moving into a new facility where they'll have multiple prep rooms to work with, and that's going to speed things up. But we are lucky. I mean, we have a lab 2 hours away that's doing this job for us. We don't have to ship to South Africa. We don't have to be stuck in that giant backlog that ALS has. I mean, it's the hottest market we've had in years. There's a lot of work going on. All of those labs are bogged down. So if it means a little bit slower turnaround, it's okay. Because when you look at the mineralization that we're drilling, it's extremely visual. We are going to have some core here at PDAC for people to see, and it's extraordinarily visual. So you don't miss the Bornite. It's that purple peacock color. It's beautiful stuff. You don't miss the massive chalcopyrite. It's obvious. So when we're drilling, we can take every single line and direct where the next holes go, and we can follow this thing, and we get it now. We have a model. The model holds. It's a direct Lumwana lookalike. It's that simple. And we can follow the system and methodically keep drilling whether or not we have assays. So yes, we've delivered 29 holes, but visually speaking, we just stay on the system and we keep drilling. And eventually the backlog of assays will catch up and we'll know what we're sitting on.
And you trade on the OTCQX. What's the ticker there?
It's MDNGF.
Okay, could you say that one more time?
Yeah, MDNGF.
Okay. And then on the venture?
They don't make these things easy, do they?
Yeah, I know. That's why I had you say it.
Yeah, exactly.
And then the venture?
Yeah, the venture is MMA. That one's way easier. Okay. Everybody remembers that one really easily. So yeah, MMA on the venture, MDNGF on the OTCQX.
Yep.
So, it's really important. We do a lot of marketing in the US. Important to us that our American shareholders can get access and our investors can get access. So.
And your email's on the website if someone has a question?
It is. It's really easy though. It's Adrian, Adrian, at midnightsunmining.com. And, I'm easy to get a hold of. Make sure that we're really accessible. So I'm always here to answer questions. Always happy to hop on a call or fill somebody in via email. Do travel a lot. That's the nature of what we do right now. So sometimes it can be tricky to get me on the phone, but I always welcome it. And it's my personal cell number on the website. So if somebody wants to get a hold of me, it's easy to do.
Don't spam it.
Don't spam it, please. But yeah, no, you can always get a hold of me.
All right, well, thank you for sponsoring the show, and I look forward to covering your ongoing results.
Yeah, we're glad to be doing it. It's nice to get the story out to a new audience, and it's something where we're at that point now where we can really show people the scale quickly, and it's going to be interesting for your followers to see this process build out.
Yep. Thank you, Adrian.
Excellent. Thanks, Bill.
Yep.